In this video, we're going to analyze stock ticker symbol SPY ETF, the Spider ETF, the broad market S&P 500 ETF. As always, we're going to take a look at the monthly time frame first and do our top-down analysis. As previously mentioned 2 weeks ago, we have a strong level of demand on the monthly down here. If price reaches down here, this is a great place for me to go long. Again, this is not trading advice, financial advisory. This is just a random person on YouTube making videos on how to trade and where to trade. But please do your own research. So this is a good area, and then we also mentioned that this is another area where in the lower time frames, like on the weekly, this is a good area to go long. If price retraces down here, and we want to see if this price level retraces. Let's take a look at the weekly chart now. So if I could zoom out, not making these charts scrunch too much, we could see that this level was the monthly demand. This level right here was the weekly area. So I drew this wrong. It should be like this. And so you can see that this weekly level is holding out well. Last week, just remember, every candle represents 1 week of time. So last week it formed this, and now this week is starting to form this. It won't close. We won't know what this candle closed until this week. This is Sunday. Today is Sunday, October 4th, 2020. So we know that this candle closed already, and next week it will make another candle. So we know that there is also a level of supply right here as price lost momentum. Price created level of supply right here. So this is a very small margin of profit for some aggressive traders or day traders or short-term swing traders. This was a good play, and then it goes up. But supply is right here already, so your take profit margin is very small. I mean, it's, if you got in at 323, take profit at 343, that's about a 23.43, so about $20 move up if you were able to catch everything. But on the longer time frames, we may see price go up here and then come back all the way down, maybe bounce here and then retrace lower. And this would be a pretty good area to go buy. We have a pretty long, pretty high area back to profit taking from down here. So that's for those of us who are trading longer term strategies, taking longer term time frame trades, swing trades, position trading. This is a good area to go long right now. This was a good bounce on the weekly, but it's gonna go back to this weekly supply zone. So we want to either wait for a retracement back down here, or we want these highs to be taken. But either way, it's going to take some time to play out, but don't be surprised that there's going to be red news and red days in the market, because price is going to reach in here. It's going to have some pretty bad news. So don't be surprised when you see that on CNBC. If you are a full-time trader or a real trader, you should not even be looking at, or like a technical trader, you should not even be listening to CNBC. All right. So on the daily time frame, this is our entry time frame. This is what we have. We have supply up here, which is that weekly supply zone that I created just a few minutes ago. There's a level of demand down here. So this would be a pretty good area to go long to. Right here, this darker blue, shaded blue area here. This is a pretty good area to go long to for short-term income. But again, I'm trading the higher time frames, and I want this zone down here. All right. So this is it for the analysis. If you got value from this video, please consider subscribing to the channel. Click on that bell so you get notified of new videos I release in the future. I make daily swing trading videos on stocks and forex using supply and demand. If you like the video, please hit the thumbs up button. It helps with the YouTube algorithm. I want you to transform your charts into profits and build the life you love.